Well, ladies and gentlemen, we are back. 2026 is in a full swing. There is no lack of news, announcements. Let's just call it. There's just a bunch of shit going on that we need to break down because this is crazy start to the beginning of the year. Let me just stop for a minute and tell you how I know it's a crazy start to the year, because a lot of you guys are reaching out. And you're talking about purchase, you're talking about refi, you're talking about investment, you're talking about getting out of this loan, that loan. So there's just a lot of conversation going. And obviously this 2026 is kind of the year that we all think, okay, Powell's ending his career, new Fed chair coming in, the jobs market's kind of getting shaky, inflation, we're not sure if it's going down. Obviously, the Trump administration is going to do whatever they can, as we're going to talk about this video, to lower interest rates. But look, we all thought 25 was going to be the year. Now we're like, okay, 26, this is the year where we're going to see maybe rates kind of get lower and the real estate market kind of maybe turn around from this kind of stagnant thing. And it's been kind of stagnant in many different ways, but in this video today, I really didn't want to talk about all the stagnant and all that. What I really want to talk about is some of these huge announcements that has come out, and let's break them down and go through them. What do they really mean and what's going on? But the biggest ones we're going to obviously talk about is stuff that has to do with interest rates and these announcements coming out where Trump, boom, $200 billion, going to basically buy down interest rates. Boom, cap. Can he crap credit cards at 10%? Can he stop the big real estate investment firms for buying houses? Obviously, Fannie and Freddie I spoke about, one of the big winners here for California. Not many people are talking about it. I know, because I even talked to lenders who weren't even aware of this. But in March, they're going to be changing rules so you can have a single family with up to 3 ADUs, or anything that is up to 4 units, 3 ADUs, 2 ADUs, whatever it is. The new Fed chairman coming in hot, a 50-year mortgage, a transfer mortgage. I know some of this we already talked about. And as of today, as I shoot this video, yeah, we have more crazy news that now they're going to maybe indict Powell or whatever. Look, a lot of this stuff is just hype. We're throwing stuff against the wind. We're throwing spaghetti against the wall to see if it sticks. Obviously, we're coming to an election year for, I think it's the House, the Senate, whatever it is, right? I'm not presidents, obviously. But there's just tons of stuff going on out there. Obviously, there's a huge push because we're catching all this fraud, which we all knew exists, especially here in California. I'm going to do another brief on that. Why? Actually, the fraud in the US, that's probably $700 billion, $500 billion, $1 trillion a year, how that is actually crushing people. Number one, because you don't know why, probably. Number two, it's not helping affordability. Number three, it's not helping interest rates. And number four, could you imagine if we just got rid of it, or could get rid of that money because we can't balance a budget? Because I can tell you what we can't keep doing. We can't keep raising sales tax, property tax, insurance rates, like the whole thing, which whacks us all. We can't keep raising the prices on everything while people keep spending out of control, pissing money down the toilet. We're never going to get back to affordability. We're going to just keep printing money, tax everybody to death in every way. When I mean tax, I don't mean just like that. Literally, it's like we're getting taxed every which way. It doesn't matter what administration comes in. This is not going to end until they basically get rid of this shit, this bullshit, fraud, waste, and abuse that is going on by both parties. You guys know you do it. That's why if you just go and ask somebody, say, hey, let's talk about balancing the budget. They want, where they up. They just left because they don't want to balance the budget. They just want to spend, spend, spend. But we need to. We need to get efficiencies. We need to cut waste, fraud, and abuse. Like Elon really wanted to go. I don't care if you like the guy or not. He was right. We need to cut it because we are all paying higher interest rates. We're paying higher costs on things. Everything is more expensive. It's going to continue to be if we don't get a cap on this. I don't care who you vote for, who you like, who you don't like. Go get any politician in front of you and ask them, say, hey, tell me how you're going to bring down the budget. Just tell me. Tell me how you're going to balance the budget. Just bring down the deficit. They can't answer it. What they give you is a bunch of BS. So that is going to be another one. Obviously, you can tell I'm passionate about because that's the easy low-hanging fruit. It's not like, hey, let's go give a tax cut. So let's hike your property tax, or let's whack you on this or whack you on that. Like all of us get hit for it, guys. It's not just, oh, let me just go tax a billionaires. Cool, go do that. That's not going to solve the problem. It's right here we are. It's just crazy spending out of control by our politicians. Like we live in San Diego. I had family come in here over the holidays, like these streets. Guys, we have the money. They just stopped fixing the roads. They want, hey, when you go to Balboa, you're going to tax you to park or the zoo or anywhere. If you wake up and breathe the city, we're just going to tax you because we got to fix the roads. No, you're not. You're just going to go give yourself more money or throw it down the toilet. Like we have the money to fix roads. You're just not fixing it. So just give me examples. But today I want to go over this topic because they're pressing, but a lot of it is it hype? Is it going to happen? Let's break it down. Also, I'm going to talk about why interest rates went down because it might not be what you think. Because a lot of people that are even in my business, they're going, yeah, interest rates went down. I go, why? They're like, what do you mean? They just went down. I'm like, but why? Why did they go down? Well, because Trump said, no, but why did they go down? What technically made them go down? They can't answer the question. We're going to answer that so you guys understand a little bit. But anyways, happy new year. Happy 2026. I know this is not my first video of the new year. I know you guys got my other one about waking up early. I'm super excited about this year. There is going to be a lot of opportunity. I know it's coming for people to refinance, to save money, to buy a property, to buy an investment property, hopefully get out of some, crappy loans. People need this. We need to get rates out. I'm not saying we need to get rates in the 2s or 3s now. I'm just saying that 30-year fix, if it's at 5.99 today, it really needs to be closer to 5 if we're really going to move this market and get things going and help affordability. It just has to. How do we get there? There's many ways to do it. I could tell you, but that doesn't mean a straight path to get there. But anyways, if we've never met, my name's Kenny Simpson. I focus on one-off unit financing. That means I help people refinance or do purchase loans for one-off unit properties. Been doing it 20 years. Helped over 5,000 clients, funded $1 billion of loans. And I shoot videos like this to help you understand all the craziness going out there. Try to break it down and make it somewhat intelligent, palatable, so you understand it. A lot of stuff, honestly, guys, nobody understands what the hell's going on. So I will do my best to break this stuff down. Let's get into the video. And then next week, I told you, just a little prep, that next week I'm going to be talking about how these deficits, the fraud, the waste, the abuse, the inefficiencies in the government, like local, state, city, whatever, federal, how it's crushing, killing affordability. Like it's not helping. And it's the biggest low-hanging fruit that we all as Americans should be pissed off about, because forget taxing the billionaires. Fine, you want to tax them, go ahead. Do the math. It ain't going to solve the problem. You're not going to, this is the thing that if you just went in there and we just demanded shit to get better, you could save $1 trillion a year. $1 trillion a year, probably. Literally. It's there. You and I know, we all know, if we live in California, any place like that, we know the waste, we know it. We just kind of live with it, but we got to stop living with it. Anyways, all right. So let's get to topic number one we all want to talk about. Okay, huge announcement. Trump's announced $200 billion of buying mortgage-backed securities to lower interest rates. Okay, first of all, number one, can he do this? Honestly, sure. I don't know. I don't know if he can. Legally, I don't know. But remember what I've been telling you guys for a long time. The 10-year market, the spreads, things like that, they will move whether Jerome Powell says something, maybe a Warren Buffett says something, maybe a Trump says something, maybe a politician says something, maybe, that Bill Poultry says something, a Fannie and Freddie. What I'm saying is that interest rates can move just based off what somebody says. So Trump mentioned that he's going to take $200 billion that Fannie and Freddie has, supposedly, and he's going to supposedly buy mortgage-backed securities, not at once, over time. It would bring down the interest rates. With that news, that helped rates. But here's the question. Everybody's like, oh yeah, interest rates went down. What went down? Because the 10-year treasury didn't really go down that much. It was actually the spreads between the 10-year fix and the 10-year treasury and the 30-year fix. That spread that was once 3%, that last year, remember I told you, that was the biggest driver to bring interest rates out. So you're seeing it right now. The interest rates went down because the spreads went down about 20 basis points. Yes, the rates last week were better on Wednesday, got worse on Thursday. With this news, they got better on Thursday, but it really was the spreads. Last year, interest rates came down. Like I told you guys, it was a little bit of the 10-year, but mainly the driver of interest rates last year was the spread between the 10-year fix and 30-year treasury. It basically at some points the year is at 250, end of the year around back to 2%. Those spreads could be 180, 160. So there's still some room to go. So those spreads still could bring rates down 20, 30 plus basis points. Okay. So number one, the spreads, they go down because of confidence. If they're raising rates or banks are falling apart or things like that, and the confidence is not good in the market, meaning like that, like for lower rates, the spreads could get blown out. But when you see the government come in or the feds come in, we're going to start cutting rates, we're going to start, lowering rates and things like that. You've seen this come down. So that is exactly why the interest rates went down. The 10-year treasury, actually in the morning of the announcement, the 10-year treasury went up, they came back down. It was a little bit of movement, but it wasn't enough to move interest rates that much. So it was the spread. That was the winner for Friday. And that was the big case. All right, number two, announcement came out with Trump is the credit cards. And I'll get back to interest rates on the end of this and what we think is going to happen over the period, but I want to get through these. Number two, could Trump cap the interest rates at 10% for 1 year? Sounds great. Could he do it? I don't know. We'll see. It's another saying. Why is Trump doing all this stuff? Do you guys know? He's doing this because obviously there's the election year up in November, I think, for the Congress or the Senate or House, whatever which one. Sorry, I don't know. I'm not in tune all this political crap, but one of those. And so obviously the biggest thing he won on coming in here is affordability. Get interest rates down, right? Get cost of goods down. Make things more affordable. Because the people at the lower end are just getting crushed. The middle class is getting crushed. They're not feeling like they're getting ahead. They're not getting the pay raise. And since the beginning of the pandemic to now, cost of goods, especially from 20 to 24, the cost of the goods went up 22%, and they're kind of sticking there. So that burrito, as I mentioned before, that's $15. It once was like $7 or $8 or $5. That's probably not going back down. So we have to like load that. So what they need to do is get your wages up. That's what they can focus on. But so Trump was on affordability. So if he can buy mortgage-backed securities and gets rates down, it's going to help with the Republicans for election. If he can cap interest rates at 10% for 1 year, it's going to help look good and save you money so you can pay down that, like, boom, pay down your credit cards quickly, right? So what's the third thing he mentioned? Okay, why don't we just go after these big real estate investors, the ones that even gave him money for his campaign, and say, hey, you can't buy any more houses. We're going to ban that. Why would he do that? Because even though everybody thinks they're a huge competition and all this, they're literally like 1% of the market. Fine, sure. We'll just cut them off. Don't buy anything. If they buy less houses, that means there's more houses on the market and there's more options, and it should make things more affordable. Boom. So 1, 2, 3, boom. Come on. Hey, let's do a 50-year mortgage, right? Let's do that. He proposed that. I don't think that's going to go. Good idea or bad idea? Who cares? It's another mention. It's a thing for affordability. Some people think it's good. Some people think it's bad. What do I think about it? I think it's very simple. Do the math. On a 50-year mortgage, you're going to pay X amount more over time. When you look at it, that number will probably scare the shit out of you. I think some people could use it to get into a house because of DTI and then turn around and say, instead of paying a 50-year mortgage, I'm going to pay this. I'm going to set up my payments over 30 years and pay it off. I only got the 50-year mortgage because it lowered my payment by $400, right? $500, $700, which could be huge. But also you got to look at the number of how much interest you're going to pay over 50 years. Maybe you care, maybe you don't. But you could just say, why I'm doing that because my DTI was at 49. I need this house. 30 year, it was going to go to 55. Now it's back to 49. I can buy the house, but I can't afford to pay that extra because I have roommates or I have a side hustle I didn't use, whatever it is. Transfer mortgage is another thing. Hey, maybe we can do that. So I'm living in a house now and my interest rate's 2.5% on a 30-year fix. I want to transfer that mortgage to another house as long as it fits the guidelines. Could you do that? All these sound like great ideas, not great ideas, whatever. Can it get done? Who knows? But these are all things to help affordability. Right? Because look, if you can go transfer that mortgage 2.5% and go buy a home that's bigger. Let's say you live in a condo. You bought it for $500,000. You're $400,000. It's worth $700,000. You want to take the money out. You want to go buy $1 billion home, put the $300,000 down, and you want to transfer 2.5%. Obviously, that's huge for you. That's huge. Save money, affordability, all that. So he's tapping into all these affordability things to help you. And then the other thing I mentioned on here really has nothing to do with affordability, but it could help, was the ADUs. Finally. I mean, we've been banging on Fannie Mae's door. That's our industry, talking to Fannie Mae. Finally, we have people, I feel like the leaders in there have more common sense, more business sense to get shit done. I felt like we're stuck in the mud, nothing going on for a very long time. It doesn't matter what administration's in there, guys. It's all about leadership. So if you have somebody that's sitting at Fannie and Freddie or at the Fed or anywhere, and they're just not moving the needle, they're not trying to make things better, they're not trying to make things more affordable, get new products, and they're just kind of going through the motions, it's not going to help any of us. So the fact that we're finally, after 4, 5, 6 years, you have a place like San Diego where they're like, hey, let's build houses, let's build ADUs, let's do this, and you can't get financing, it's the dumbest thing ever. So the fact now they're going to allow a single family with 3 ADUs or a 2 unit with 2 ADUs or a 3 unit, 1 ADU, huge, smart. There is some caveats around that because you have to qualify at the loan amounts and stuff, but it's a win. So you could potentially buy a house with those ADUs, right? And help with that cash flow. The other good news, this should spark other lenders and other lenders that don't look at it this way. Most lenders will follow Fannie Mae's suit and say, okay, we'll pick up these guidelines as well, and we'll do it as well. So when you need to get those higher loan amounts on the jumbo products, because remember, when it's a single family plus 3 ADUs, it's not a 4 units Fannie Mae. It's a single family because that house in San Diego is still technically a single family. It will never, ever change from a single family when you have 3 ADUs. It's a single family with 3 accessory dwellings. That's where a lot of you get wrong. So you're not going to go price it as a 4 unit and go, oh, the loan amount goes to $2 million. We're good. No. The loan amount's going to go up to whatever that conforming high balance loan amount is in your county, right? And so that's why you have to have these jumbo products or other products come on that can facilitate those higher loan amounts. And that's why some of these products, like, we're not going to do those, but if Fannie and Freddie does it, they're like, we'll allow it because we kind of follow suit what they do. Not everybody, but I think we'll see it. The other thing that should pick up from that, which should help maybe affordability and help people out too, is they can also, the construction lenders, this should help bring some more competition. The construction lenders have more options for people to start building these because now they have financing to take it out. And obviously the biggest problem with the ADU thing, which you guys, if you follow me, you've heard me talk about, is the appraisal piece. You need to make sure You have the right comps. You need to make sure you have the right appraisal. And I'm not kidding you. I can send an appraiser out here to San Diego to a property, and it's a single family with an ADU, and I give them all the comps I want. 3 things will come back. One will come back, and let's say that person spent $350,000 on building a brand new ground up 3-bedroom, 2-bath, 1,200 square foot ADU. Some people come back and say that's worth $75,000. Some people come back and say that's worth $150,000. Some people will come back and say it's worth $400,000. You're going to sit here and go, Kenny, how is that possible? How can they legally do that? Well, folks, I have battled this, and the person at $75,000, the person at $400,000, there's one thing they have in common. Most of them can't answer this question. Can you just tell me how you came up with $400,000 or 75? And you know what I've gotten back? What? Oh, nothing. Because they can't answer the question. So that's another problem. That's why we need more comps and more sales. So hopefully with this thing of loosening the guidelines, we'll get more lenders to do more deals, more sales. So you, the homeowner that wants to go build these, goes, oh, so if I build 3 ADUs and it costs me $1 million to build all 3, I could potentially add $1 million to my house, or $1.5 million, or what is the number? Or if I build 1 ADU, I could get this. Because right now, when you're building that ADU, you might not be getting dollar for dollar. You could build it for $450,000, it comes back at $300,000, and you're going to cry and whine. It's because a lack of data, and it's also because it's a lack in the appraisal industry, which I tell them this. It's a lack of education. They have not educated these appraisers. How these appraisers can come back, one at 75 and one at 400, it's mind-boggling. It's unbelievable that they can take your money, go out there, look you straight in the face and do this, and they can't answer the question. How'd you get? They can't answer it. Because how they got there, I got to 400, I got to 500. Here's the comps. Well, you see, no, I don't see. I clearly see that there's no way a 3-bedroom, 2-bath, let's just call it a structure behind another house in San Diego in a nice neighborhood is worth $150,000. There's no way. That's crazy when you can rent it out for $5,500 or $5,000 or $3,500, or depending on the neighborhood, $7,500, right? There's no way. So we need the comp. So to wrap all this up, there's a lot of stuff going on. There's going to continue to be more and more and more. So the one thing that we're looking forward to is who's going to be the new Fed chairman. Yes, as I told you, I shot this video. There's some prosecution or some bullshit going on with Powell. I don't agree with it. I think it's stupid. I think we're just wasting time. It's like, just announce who the next Fed chairman is. This person does need to remain independent. They need to follow data. But what I will tell you is we could look at data differently. We could look at real data because of AI and stuff. We don't need to wait for data to catch up. Some of the data the Fed does look at is a year old. It should be faster. And on top of that, let's just be honest. Could interest rates be lower? There's an argument for both sides, right? What is holding up interest rates? What will make them go lower? Number one is if the Fed actually starts, if the Fed or the government starts to actually buy mortgage-backed securities, that could potentially definitely bring the 10-year down, which could help interest rates and help the spreads. Number two, though, is obviously if the jobs market keeps falling apart, showing cracks and weakening, definitely could cause caution to the wind, could cause the Fed to cut more, say they're going to cut more, and that could bring interest rates down. The other thing too is inflation. The reason why the 10-year is kind of sticky, not really moving as much as we'd like, is because it's not sure about inflation, right? Inflation was crazy, then it started coming down, and then it's kind of leveled off or whatever right now. We've got a lot of mixed data. So over the next 1 to 2 months, when we get the data of the inflation, we're hoping to show that it's not going up, it's not remaining flat. We want it to start going down. So how do we get inflation down? Like I just heard today, the cost of gasoline in California, woohoo, where we get taxed $1.90 per gallon. That's already come down, like food, anything else, energy. We need things to come down to bring the inflation down, so it'll ease the 10-year treasury and bring interest rates down further. I do think that we're at whatever, 5.99 and the 30-year fixed note points, whatever it is today, depending on your scenario, it could be lower, whatever, right? My point is that we need to get these interest rates down 50, 75, 100 basis points this year. I mean, it would be great to be able to offer 5.25, no points on the conventional purchase. That would be wonderful. That would really help move the needle. That means you could be in a position where FHA, VA interest rates are the high 4s, and then you can also be buying that rate on conventional, hopefully down into the high 4s, at a low 5. So that's what I got for you. A lot of stuff. There's going to be, trust me, this year is going to be full of craziness. I didn't even get into all the other crap that you guys are going on, but the fraud cases, the wars and all this. So when uncertainty comes, typically it's not good for the economy. We felt at the end of last year where we had the shutdown, things did slow down. We felt some of the pain. So we will see. Will the jobs market kick back up or keep sputtering along and causing issues? We'll see. Will inflation start to dip? Those are the two things we're going to be watching for interest rates to bring down. On top of it, Trump and his team will do whatever they can to bring them down and all this other stuff to help affordability. You will continue to hear the affordability message over and over and over again. And obviously, as you know, stick with me here, guys. We'll keep breaking all this stuff down. Anyways, appreciate you guys. If you have a scenario, you need a purchase, you need a refi, you want me to look at it, let me know. If you have a scenario coming up that, hey, Kenny, I'm in a DSCR loan or a non-QM loan. We got 3 more months in a prepay. Reach out to me. I know some of you have. If you just purchased a place and you want to look, you think about, hey, when's a good time to maybe refi? If you're self-employed and you're getting ready to do your tax returns, you're like, hey, I want to make sure I qualify to buy a house or refi, hit me up. So all these things are going to matter. That's why a quick conversation is great. Hit me up. Love to chat with you, and we can book an appointment and get on a call, Zoom, whatever's best for you. Anyways, guys, thanks for watching. Happy 2026. Let's go, baby.